Crash course on current U.S. bank failure. Silicon Valley Bank, SVB, and Signature Bank, concerns for recession or Great Depression. According to various sources, SVB and Signature Bank were two U.S. banks that had a lot of exposure to crypto and tech startups, which are risky and volatile asset classes. They also had a high level of uninsured deposits, meaning that many customers had more than $250,000 in their accounts, which is not covered by the Federal Deposit Insurance Corporation, FDIC. Last week, Silvergate Bank, another crypto-centric bank, collapsed due to regulatory pressure and liquidity problems. This triggered a panic among investors and founders who had accounts with SVB and Signature Bank. They started to withdraw their money rapidly, causing a run on deposits that drained the bank's reserves. On Friday, March 10, 2023, regulators seized SVB after it ran out of cash. It was the second largest bank failure in U.S. history, with assets of $173 billion and deposits of $129 billion. On Sunday, March 12, 2023, regulators also took over Signature Bank after it lost more than $10 billion in deposits on Friday 1. It was the third largest bank failure in U.S. history, with assets of $110 billion and deposits of $89 billion. The FDIC announced that it would protect all depositors of both banks up to $250,000 per account. The Treasury Department and the Federal Reserve also provided additional funding for eligible banks to prevent further contagion. President Joe Biden said he would fire the management of both banks and launch an investigation into why this happened. There is no clear or definitive answer to who caused the bank failures. There may be many factors and actors involved, such as regulators, investors, customers, managers, market conditions, etc. Different sources may have different opinions and biases on who is responsible or accountable for the bank failures. In this context, a human might say that it is a matter of debate and investigation. Historically, U.S. bank failures have been caused by a variety of factors, including economic downturns, risky lending practices, and fraud. The Federal Deposit Insurance Corporation, FDIC, is responsible for handling failed banks and protecting depositors' funds. When a bank fails, the FDIC typically takes over the bank's assets and liabilities and tries to sell them to another bank. Depositors are insured up to $250,000 per account. In the wake of the 2008 financial crisis, there were a number of high-profile bank failures, including Washington Mutual, IndyMac Bank, and Wachovia Bank. These failures were largely due to the bank's exposure to subprime mortgages and other risky investments. Here are 12 of the largest bank failures in the world, ranked by the estimated losses incurred by depositors and creditors. 1. Lehman Brothers, 2008. This investment bank's bankruptcy triggered the global financial crisis and resulted in an estimated $691 billion in losses for creditors and shareholders. 2. Washington Mutual, 2008. This U.S. savings and loan bank's failure was the largest in U.S. history at the time, resulting in $307 billion in losses for creditors. 3. Mitsubishi UFJ Financial Group, 2004. This Japanese bank's acquisition of a failed lender, Chuo Mitsui Trust Holdings, resulted in an estimated $29 billion in losses. 4. IndyMac Bank, 2008. This U.S. savings and loan bank's failure resulted in $12.5 billion in losses for depositors, making it the second largest bank failure in U.S. history. 5. Bankia, 2012. This Spanish bank's bailout by the government cost an estimated $22 billion. 6. Northern Rock, 2007. This UK mortgage lender's collapse was the first bank run in the UK in over a century and resulted in an estimated $11.5 billion in losses for the government. 7. Dexia, 2011. This Belgian-French bank's bailout by the government cost an estimated $6.4 billion. 8. Banco Espírito Santo, 2014. This Portuguese bank's collapse resulted in an estimated $5.7 billion in losses for creditors. 9. Hypo Real Estate, 2008. This German bank's bailout by the government cost an estimated $49 billion. 10. Bradford and Bingley, 2008. This UK mortgage lender's nationalization by the government cost an estimated $36 billion. 11. Fortis, 2008. This Belgian-Dutch bank's bailout by the government cost an estimated $18 billion. 12. Bear Stearns, 2008. This investment bank's bailout by the U.S. Federal Reserve and acquisition by J.P. Morgan Chase cost an estimated $13.9 billion. These bank failures highlight the importance of proper risk management, regulation, and oversight in the financial industry to prevent systemic failures and protect depositors and creditors. There are some concerns for ripple effects on other bank failures in the world. According to various sources, SVB and Signature Bank failures have shaken financial markets and raised fears of contagion among other banks that have exposure to crypto and tech startups, or that have high levels of uninsured deposits. Some regional banks saw their shares fall sharply on Monday, while some Asian and European markets also closed lower. The U.S. government has taken steps to prevent a crisis by guaranteeing all deposits at SVB and Signature Bank, and providing additional funding for eligible banks. However, some analysts warn that the U.S. banking system is still vulnerable to shocks and uncertainties. Nevertheless, we are watching closely on more bank failures and the global impacts because of these failures. Here is a poem on U.S. bank failures and impacts on the world economy. U.S. bank failures and impacts on the world economy. The markets shook and trembled as banks began to tumble. Their assets lost, their debts too high. As the world watched with a wary eye. Lehman Brothers, Bear Stearns. Their names now evoke concern. Their bankruptcies causing shockwaves through the financial world's intricate caves. The global economy felt the strain as credit markets tightened their rein. Lending slowed, and businesses stalled as the banks struggled to keep it all installed. The ripple effects were vast. From housing to stocks, it all went past. People lost jobs, homes, and dreams as the financial world split at the seams. Regulations and bailouts came to pass to prevent further damage en masse. Lessons learned from the pain and strife to keep our finances safe and sound in life. The memories of the failures still linger, their impacts felt by many a finger. But we move forward with renewed hope and strive to prevent another financial slope. So let us learn from the past and build a financial system that will last, with caution, care, and oversight, to ensure our finances remain bright. We hope this video has given you a taste of all the incredible experiences America has to offer. If you're ready to start planning your own adventure to North America, please ensure to use our Booking.com referral link. https://www.booking.com/index.html?8=7989335 to book your flights, hotels, car rentals, local attractions, and more. It's an easy and kind way to support this channel and make sure you get the best possible deals on your trip. Thank you. AnHub Metaverse Team.